If you're searching for why is gold dropping today, what are the key gold support and resistance levels ahead of the weekend, or whether gold can stage a gold breakout prediction, this breakdown connects the dots from ETF flows to real yield divergence. We also cover the gold price forecast next week scenario and the exact gold liquidation level that could trigger a cascading move. Gold just took a 1.18% hammering in a single session, slicing straight through the 200-day moving average. Price is sitting at $41.60. Half the market is screaming free fall, the other half is whispering melt up. Here's what they're both missing. The real trap is a liquidity void between here and 4,035 that could run stops in both directions. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade today. Damn, why session bias is fading the bearish momentum. But make no mistake, the daily and weekly trends are still screaming strong sell. We are range-bound in a cliff-edge structure between 42.47 pivot and the 40.35 structural magnet. Price is currently below S1 at 41.64, clinging to the lower boundary of a descending channel on the 4H. The volatility is genuine. ADX is 42.7, and that's not a drift, that's a trend with teeth. The herd is stacked short. ETF demand just got dampened by hawkish Fed commentary from Morgan Stanley's desk, and that builds a short squeeze time bomb. But the single invalidation level that flips. Everything is 40.35. Write this number down. If gold prints a 4H close below 40.35, the entire multi-month bull structure from 3,800 resets, and we are talking a macro liquidation freefall towards 3,800 again. Above 42.47, and the melt-up narrative reclaims control. Let's walk the chart from top to bottom. On the weekly, we have a strong sell signal. The 50-week MA is at 44.96, the 100-week MA at 4,535, both far above us, acting like distant ceilings. The weekly MACD is plunging below its signal line. It's at minus 95 points, deep in bearish territory, and there's no sign of a bullish crossover. This is not a dip buying party yet. Drop to the daily. We are below every major moving average. MA5 is 42.15. MA10 is 42.64, MA20 is 4,333, all sloping lower. The 200-day MA sits at 43.68, and we are almost $200 beneath it. That is institutional bear territory. RSI is 35.28, not quite oversold, but weak enough to show sellers are still in charge. The daily MACD is printing a massive negative histogram. Momentum is accelerating lower. So the path of least resistance remains down. But here's what most traders miss. On the 4H chart, we have a hidden bullish divergence forming. Price made a lower low yesterday, but RSI printed a higher low. That tells me selling momentum is exhausting. And on the 60-minute, price is coiling below 4,164. This is a compression spring. The 60-minute MA20 is 4,210, sloping flat. MA60 is 42.85, still acting as a ceiling. So we are in a classic bear flag on the 1H that is. Either about to break down into a liquidity grab at 4,118 or fake out and squeeze toward 42.47. Key support. 4,164 must hold on a closing basis to avoid acceleration. Below that, 41.18 is the 4H demand zone where buyers are likely waiting. The 40.35 level is the monthly pivot support, the biggest line in the sand. On the resistance side, 42.93 is the first ceiling, then 43.76, and 44.22 is the gateway back to bullish territory. While I talk through technicals, watch real yields. Gold is moving tick for tick with the 10-year TIPS yield, which just popped on the hawkish Fed minutes. That correlation is driving this bus. The last 24 hours changed the game because Morgan Stanley published a note titled "Gold Faces Hurdles on Path to 5,200 as Hawkish Fed Dampens ETF Demand." That single headline triggered a wave of ETF outflows late in the session, and spot gold got smoked. The policy divergence play is straightforward. The Fed says higher for longer, real yields rise, the dollar catches a bid, and gold gets sold as a non-yielding asset. But here's the twist. The monthly chart is still a strong buy. The 100-month MA hasn't even flinched, and the long-term trendline from the 2025 lows is intact. So what we are seeing is a vicious mid-cycle correction inside a secular bull trend. The cross-linkage with the dollar index is loud right now. DXY is flirting with a breakout above 105, and a weekly close above that would be another headwind for gold. Bitcoin is also flashing a risk-off signal, consolidating below its 200-week MA, which reinforces that this is not a gold-specific weakness but a broad liquidity retreat. My 1 to 2 week directional lean is a grind lower to test 41.18, possibly a wick to 40.35, followed by a sharp reversal. The event that invalidates this view is a daily close above 42.47. Do you think gold breaks 40.35 this week? Comment yes or no. I'm tracking consensus. Before I start, most people skip this section. That's exactly where the money is made. Keep watching. Strategy 1. The sniper. Conservative, we are waiting for a liquidity grab below 41.18. I want to see gold drop to the 4,118 level, preferably with a 4H wick, and then a swift 1H close back above 41.30. That reclaims signals the bears got trapped. Entry is on the 1H close above 41.30, with a stop loss at 4,105, just below the wick and beneath the 41.18 demand zone. Take profit 1 is 4,170, which is right around the broken S1 at 4,164 now acting as resistance. Take profit 2 is 4,247, the pivot and the key level that will determine the melt-up. That gives a risk-reward of better than 1:3. This setup is voided entirely if the 4H candle closes below 4,105, then the bears are still in full control and we stand aside the sniper, conservative, entry, 4,130, 1H close above, stop loss, 41.05 take profit 1, 41.70 take profit 2, 42.47 risk, reward, 1:3.2 are invalidation, void if 4H close below 41.05 strategy 2, the active trader, standard this is a fade the breakdown short. If gold loses 41.64 and retests it as resistance on the 30-minute chart, we become sellers. Entry is a 30-minute close below 41.60, with a stop loss at 4,185, above the 1HMA20 and the overnight consolidation high. This captures the momentum if the herd keeps pressing shorts. Take profit 1 is 4,118, the initial support. Take profit 2 is 4,075, just north of the 4,035 magnet, leaving room for a tail. Once TP1 is hit, trail the stop to entry. This trade has a risk-reward of about 1 minute and 2.5 seconds. If price reclaims 41.85, the setup is void, the squeeze is on. Type your XAUUSD range for tomorrow in the comments now. Let's see who's aligned. The active trader, standard, entry, 4,160, 30M close below, stop loss, 41.85 take profit 1, 41.18 take profit 2, 40.75 risk, reward, 1:2.6 are invalidation, void if 30M close above 41.85 strategy 3, the aggressor, high risk. This is a counter-trend scalp for the brave. I'm looking at a bullish divergence on the 5-minute chart right now. If we see a spike down to 41.45 to 41.50 and a 5-minute bullish engulfing candle forms, I'm going long with a microscopic stop at 4,135, just below the 4,164 support band and below the psychological 41.50. Target 1 is 4,180, just under the 1HMA20. Target 2 is 4,215, the MA5 daily. This is a 1 minute and 2.5 seconds risk-reward scalp that relies entirely on the 5-minute momentum flip. This is only for those who can lose small and manage risk aggressively. If the 5-minute candle closes below 41.35, I'm out. No questions. The aggressor, high risk, entry, 4,150, 5M bullish engulfing, stop loss, 41.35 take profit 1, 41.80 take profit 2. 42.15 risk, air reward, 1:2.5 are invalidation, Void if 5M close below 41.35. Never risk more than 1 to 2% per trade. No positions through high-impact news. Stops are non-negotiable. This is how you survive to trade the next big move. The single most critical level for the next session is 4,035. A daily close below that and the gold bull case hibernates for months. Above 42.47, and we start pricing in a melt-up to new highs. Tomorrow's wildcard is the PCE inflation data. Any upside surprise could send gold into a fresh freefall, while a soft print could ignite the short squeeze. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.